Trillions in stimulus have been pumped into this system, and more might be on the way to keep this ship afloat. You came here for the truth, so let me unveil that for you. Today we are going to talk about jobs. I'm talking about the jobs report that has come out. It showed more positivity, but there's something else going on under the hood that I'm going to reveal to you today. We also have to discuss the labor force. The labor force is ultimately going to give us a broader picture of what's happening here. And then we need to discuss compensation. What's happening at the employer-employee level that the stats on the surface level aren't necessarily telling us. And then last but not least, we need to cover food prices, because for individuals out there who are already struggling, increased food prices is going to hit them even harder than we've seen before, and it continues now at a decade high for food prices. Let's get into it today. Straight away, I want to tell you what's going on in this CNBC article, and I'll bring you something from Reuters that essentially suggests that what you're seeing here with the job growth, it's accelerating, everything is fantastic, but there's just a little piece that it's thrown in there, but it's not at the top, it's not on the front page of the news, and it's not really being discussed. And I want to bring it to you, I want to highlight that because I think this is the most important part. Job creation accelerated in May, but is still below lofty expectations. Okay, they wanted 671,000, they got 559,000. The unemployment rate is now at 5.8%. I can't believe it either, but it's 5.8% according to the U3 unemployment rate. This is ridiculous. The numbers it's going to be in the negative pretty soon. It's going to be in the negative, and there's going to be unemployed people all over the place. I mean, the numbers are so off from reality. I digress. Markets reacted positively to the report, with investors expecting the Fed to keep a loose monetary policy. Isn't that interesting? They're going to keep that loose monetary policy. And why is that the case? Talk more about that in a second. It is unlikely to convince Powell that progress has been, quote, substantial enough just yet to start signaling tapering. That's what it's all about. Things, if they're really bad, that means the Federal Reserve's got to print money. That means they've got to keep interest rates low. But if things start to get better, a substantial amount better, well then, the Federal Reserve has to start talking about cutting back. Oh, but don't worry, because it's below their expectations. So we don't need to concern ourselves right now about that tapering. Don't worry, everyone. Everything's going to be just fine. Here you can see the actual data. I pulled this up from Trading Economics, and you can see how weak it has been compared to, previous months that we've looked at this coming through. It's not telling you the whole story. You could suggest it's strong. It's below the estimates. It's lower than what we've seen before in 2020 when everybody started going back. There's so much more going on here. And this is one thing that isn't being talked about. Not in the labor force. Look at this here, about 100 million people. 100 million people currently not in the labor force. And you look at that big blue area, if you can see that, that's 93.5 million. And that is of the don't want a job section. And then this red area, which is about 6.6 million, currently want a job. So you got to break down the numbers. Obviously, they're just trying to make a point here. But I think it's interesting just to look at the data, splitting this up between the unemployment rate and the labor force gives you a much broader perspective on what's happening as far as I'm concerned. Okay? Now looking at this, many people have talked about what's been happening. They've given their opinions, and that's important. People need to have their opinions on what's coming through, especially when you have a crisis like this that's affecting millions of people. A record high 48%, by the way, this is from the NFIB, okay? 48% of small business owners in May reported unfilled job openings. Okay, now you're looking at this right here, record high readings for the unfilled job openings. It's 26 points higher than the 48-year historical reading of 22%. So right now, people can't fill these positions. And I know there's a lot of people out there who have simply stated that they need to pay more and people will work. So we know right now what's happening for some individuals, that the stimulus is coming through. The stimulus pays more than what their measly salary would be given them. So these people are simply saying there's really no incentive to work. Some of the, I believe it's 24 states are now going to go off of the all of these policies in starting June. I believe it's June 12th or so, whereby they're not going to be giving the checks out. And as a result, people are going to have to make a decision. They're going to have to maybe move if that's what's needed. They're going to have to do anything they can because that stimulus isn't coming through. But something interesting I found. At the very bottom paragraph, a net 34% of owners reported raising compensation, the highest level in the past 12 months. A net 22% of owners plan to raise compensation in the next 3 months. That's up from April. So whether they're doing this because they want to or because they have to, ultimately, that's what the statistics are saying. That they have actually increased compensation. And a lot of these places have done so because they need to get people in the door. If people aren't coming in at, let's just pick a number, $15 an hour, maybe we'll try $17 an hour. Maybe we'll do a sign-on bonus of $500. And in the case of McDonald's, offering a free iPhone, if you can believe it or not. This is just a chart that corresponds to that, and you could see the statistics right here. Just trying to show you in chart form, but essentially what we're looking at is a period of time in which there's a lot of uncertainty, there's a lot of difficulty for millions of people, and yet all the governments around the world are able to do is simply throw a bunch of money out there. They give you the crumbs and they give all the real money to the institutions. I keep talking about this over and over again. People say, the solution is to tax the rich. The solution is to do this or that. But if you actually look at what the bills say, and I've shown it so many times on the channel, it's to take money from the people and to give it to the elite. And it's done so secretively. It's done in such a way that you can't figure it out. It's done like that on purpose. It's to shield us from reality. Many people would say the CARES Act. I mean, how can the CARES Act be wrong? They care about us. It says it right there. And you've got this person in the government, that person in the government. They're signing it. They're cheering for it. How could it be bad? It's because of what's written in these 1,500-page bills and more and larger that people just don't get. And that's what I'm trying to break down here. So this is the real deal. The government, number one, the government is suggesting that more jobs have been created. Number two, the data does not reflect reality, plain and simple. The Labor Department themselves have suggested that all of the data so far from 2020 into this year isn't accurate. They've admitted that. I've covered it and documented it on this channel. And then number three, we'll talk more about this in a second, but food prices are at 10-year highs. Inflation in what people are actually paying. Price inflation is really going off the charts today, and that corresponds to anything basically you're looking at. Everyday items are becoming extremely expensive, and that means you've got to watch out. You've got to watch your spending, and you have to be very mindful of what you do, where you go, because everything today seems to be getting really, really pricey. This right here is just the breakdown, and it looks like 186,000 of these total jobs from this report, 186,000 of those are waiters and bartenders. Now, that was obviously part of the biggest hit group, but now you're seeing that the vast majority of those jobs are these, which quite frankly are not high paying jobs. So we'll see what happens in the coming weeks, in the coming months. It's good that they're getting their jobs back. There's no doubt about it. But ultimately, these are the type of people that have been struggling for such a period of time. And I wonder what's going to happen in the next little while when they can't keep up with all the debt. This is not really not good. Total Americans collecting benefits right now today, 15 million. And of course, food prices are rising. This article is basically just breaking it down, showing you that apparently 5% last month for the UN index of food, another tracker of price from grains to sugar and coffee is up 70% in the past year. Of course, you will have to pay more. It's not that Heinz and Kraft and all these companies are just going to take the hit. No, you absolutely will pay more. They do get into more details, but essentially the point is made. Even in the US, rising prices hit the poorest Americans who spend more than 1/3 of their income on food. Those are the type of people who might be working, those bartenders and waiters. Those are the type of people who are relying on that $1,400 stimulus check. Those are the people that are struggling the most, and the government is absolutely never going to watch your back. They are colluding with the Federal Reserve to make sure that you stay where you are. And that brings me to my last point for today. The bottom 90% of Americans are borrowing from the top 1%. The savings of the rich are recycled into household and government debt. I could go on, and I was planning to go on, but the article does explain it. We know 3 things about the US economy. The rich are getting richer, everyone else is in debt, and interest rates have fallen. Is there a connection? Yes, and the link has implications for fiscal and monetary policy. Essentially, that these wealthy people, as it explains here, they've got a lot of money, they can't spend it all, and essentially saying it's recycled into productive investment where they want it to be, where they're suggesting that it can go, but ultimately, those who need the money have to borrow. They have to borrow at high rates, and the richest of the rich people get to benefit from that. So they borrow cheap, and you lend out not so cheap. Okay, so this is the unfortunate part. I'm trying to make it clear in my own way. I'm trying my best. The Federal Reserve, the central bank system, the way it is created is to take from you. That's the important part. It is to take from you, and every single action they take only makes it worse. If you haven't already, you need to sign up for the Insiders. And now I've got something to entice you to come on by, because I'm giving you the 7 critical tips for financial education. Maybe you already know these, but you can definitely share this PDF with your friends, with your family. Anybody who signs up right now is going to get this PDF. It's going to be emailed to you automatically. So definitely check it out, themoneygps.com. If you want to support me, all you got to do is give me that thumbs up. I really do appreciate it. And last but not least, you've got to check out this video if you haven't already. A lot of detail about what's happening with Russia and the US right now.